barrels per day.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is...
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in joining my Signal service, please do not hesitate to visit my website dailymarketmovements.com. I charge a very small joining fee of $29.99. But let's have a look at the S&P 500. If we just zoom in, yesterday's trading session, we actually ended down ever so slightly. I think we ended down around 0.65%, which is not too bad. A rather muted day yesterday. We were up and down like a roller coaster. And that was, of course, we had a few volatile moments where we had Nancy Pelosi arriving in Taiwan. So there was a big debate whether her plane would successfully land or whether it would be intercepted by Chinese fighter jets to go and land somewhere else. But fortunately she did land somewhere because for those who don't know, China did warn that if Nancy Pelosi was to go to Taiwan, China would see it as a threat, and they said that the US would pay the price, whatever that means. So that of course was a little bit worrying, but we had JP Morgan out in the morning that said, if Nancy Pelosi did land successfully, you will get a nice little rally in the markets. And that's exactly what happened. At one point, S&P 500 turned positive, we're up around 0.3%, and then around mid-session, we had some Fed members talk. And this is kind of what I was touching on last week, is that I think that investors have completely misunderstood what Jerome Powell said last Wednesday. And I did come out here on Wednesday and I said this, traders have understood that conference as a Fed pivot, which that's not the case at all. The Fed was always going to eventually have to stop hiking interest rates at around 0.75 basis points at each time. The Fed wasn't going to do that forever, as we are all aware. And yesterday we had some Fed members come out and basically backed up my bias, but they think that traders have completely misunderstood Wednesday's meeting, and they even said that they think that Jerome Powell got out of that meeting, checked the markets, and thought, oh no, what have traders thought here? That's not right. So of course, due to that, we had the 10-year yield, the 2-year yield, all rising significantly. Around 0.25% on the trading session, and of course that put pressure on stocks. So we did see a slight sell-off yesterday. But where do we go from here? Well, S&P 500 is currently resting up against a 0.382 Fibonacci support area. If we were to break below that, I think it opens up a trapdoor down towards a 50-day EMA, which is just shy of 4,000. I think that's the more likely outcome. I will not turn bullish in this market until we break above the 0.5 fib area, which is all the way up at 4,229. It's until then I still keep my bias that this market is going to go down and create fresh lows, most probably in around September, October time.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is...